On Friday just gone, Stuart Kirk, who is HSBC Asset Management's head of responsible investment, made what I thought was a very interesting presentation. I thought much of it was reckless and misguided, and therefore I thought I would make a rebuttal of his arguments. His presentation was titled "Why Investors Need Not Worry About Climate Risk." And his first main argument was that as humans, we are super adaptable and resilient. And I agree with this absolutely. But I think it is huge hubris to suggest that we need not worry about climate risk. After all, it is precisely because we concern ourselves with approaching risks that we are as resilient and adaptable as we are. It is by looking ahead and changing our behaviours that we avoid or mitigate the worst risks, not by blithely downplaying and scorning those who present us with the evidence of the severity of the risk. Second thing he did was he used the Y2K bug as an example of a previous overcaution. Now, the thing about Y2K is that it was a major risk, and the reason the lifts didn't stop is because we were concerned about it in good time. We looked ahead and we made investments to avert it. He goes on to say that climate risk is taking up too much time whilst there are more pressing and immediate threats. He says he's being asked to look at something that is going to happen in 20 or 30 years. So he believes that climate risk will only impact over that sort of timescale. But in fact, we know that the Australian heatwave at the start of 2020, which caused widespread wildfires, cost 35 billion. And we also know meteorologists have estimated that that heat wave was 4 times as likely to happen now that we are 1.1 degrees above pre-industrial levels. Now, Munich Re looked at all of the extreme weather events in 2021, and they concluded that the total cost was $280 billion. And we know that all of those events will have been made more likely by climate change. He goes on to say, markets are crashing around our ears today for nothing to do with climate whatsoever. Well, I would agree that many factors are driving current perturbations to the global economy, but climate-related risks should definitely be in our analysis of what is happening. For example, food prices are rising steeply, and that's been triggered by Putin's invasion. But that is certainly exacerbated by the fact that unprecedented heat waves in India, which have come well before they usually do, have meant that Modi's government have blocked wheat exports. To take another example, high energy prices would be much less of a factor if governments had factored in climate risk and taken measures 10 or even 20 years ago to ensure that our homes were much more energy efficient. So climate change is not causing markets to crash, but it is, and it will continue to do so for many decades, making matters worse in all sorts of areas. He then makes his most controversial assertion. He says, who cares if Miami is 6 meters underwater in 100 years' time? Amsterdam has been 6 meters underwater for ages, and that is a really nice place. We will cope with it, okay? We will cope. Well, how can you be so sure? How can you be so sure? We might cope, we might be able to adapt to extreme impacts, but that's one hell of a gamble. 37% of the global population live in coastal areas, and many major cities are on the coast. Sea level rise is just one of the gambles that you'd be taking. Agricultural yields are already dropping in some regions, and in most extreme cases drop by an awful lot. Large areas are set to become uninhabitable as a result of extreme heat. We're already seeing these incredibly intense heat waves in places like Pakistan and India, where it becomes impossible for people to work. So I wouldn't take that gamble. There are limits to how inhospitable a planet we can adapt to. Last point he makes is about growth. And he essentially says that economic growth will continue for the duration of this century. It may well continue. I wouldn't doubt that. But I think it's much more likely to continue if we factor into our decision making the threats that we see. Economic growth is not a law of physics. The many civilizations that have collapsed before us demonstrate this all too well. So I'd like to end with a question. Are these sorts of views prevalent amongst the large old guard in the finance and carbon intensive sectors? It is my strong suspicion that they are, given the amount of investment that is still made in carbon intensive infrastructures like coal. I'll leave it there. Thanks for watching.